Thank you, Mr. President. It's an honor to follow my colleague from New Hampshire, who has done such an eloquent job. Mr. President, I wanted to talk about the Export-Import Bank. I said this during the unnecessary 2013 government shutdown, and I'll say it again. Most Americans think Congress can do something to help create jobs and strengthen our economy, even if it's simply not doing any harm. Yet, here we are again, willfully allowing an important tool for economic growth to expire by not taking common sense action. On June 30th, the charter for the Export-Import Bank will expire. During its 80-plus years of existence, the bank has garnered support from every president during that span and repeatedly been renewed by Congress, often without any objection. The Export-Import Bank is not a Democrat program or a Republican program. It's a program to help American business. President Reagan's words from 30 years ago still rang true. Exports create and sustain jobs for millions of American workers and contribute to the growth and strength of the United States economy. The Export-Import Bank contributes in a significant way to our nation's export sales. The Gipper was right then, and he's right today. Those who oppose the Ex-Im Bank for ideological reasons may make their case in the abstract. But I have to operate in the reality where I've heard over and over again from Indiana small business owners and workers about the importance of the Ex-Im Bank. John, the Vice President of Specialty Hardwoods of Indiana in Napanee, told me about their small company, which has around 40 employees. They got through the financial downturn of 2008 and 2009, but suffered during that time, as all small manufacturers did, not only here in this country, but worldwide. As they returned to profitability, they made a decision to try to diversify markets. Up until 2008, they mostly sold their products to the recreational vehicle industry. Since then, they've started to sell to cabinet companies that market to the kitchen and bath industry nationally and made a direct attempt to go after export sales. Lumber product exports now account for specialty hardwoods more than 45% of their current sales. John told me we could not have done this without the support of the Ex-Im Bank. I personally have helped other small companies in our industry contact Ex-Im and establish relationships with them to market their products. It levels the playing field for smaller companies to enter this market segment. We have grown our business, employed people, and survived because of Ex-Im Bank and because of the efforts of their 45 partners who work there every single day. The stories continue. Mark, the vice president and co-owner of Agrarian Marketing Corporation, told us about his company that makes feed additives and nutritional supplements for the livestock industry. They have a very large distributor in Cairo, Egypt. It represents nearly 30% of their business. This Hoosier business, nearly 30% of their business comes from Cairo, Egypt. The credit insurance they purchased through Ex-Im allows them to source this business by extending beneficial credit terms to their Egyptian customer. It would not be possible if they required their customer to prepay for those orders. Mark said, although we're small, this segment of our business is very important to us. It provides excellent profitability, provides great jobs in Indiana, as well as jobs for contract manufacturers in Iowa, Illinois, and in the President's home state of Ohio. All would suffer if we lost this business. Bruce, the CEO and chairman of Sullivan Palatech in Michigan City, noted not only are the 140 jobs at his company impacted, but several hundred more at local suppliers. Bruce said in the event that Ex-Im was to shut down, the impact is immediate. We would very much have difficulty in getting any new orders. And the orders that are in-house, many would not be able to be shipped. We have to shut them down right in the middle of the order process. John, Mark, and Bruce are three of many in Indiana, many around the country. In my home state, the Hoosier state, since 2010, the Export-Import Bank has directly helped more than 100 companies who have exported more than $3 billion in goods and services. The Ex-Im Bank costs zero in taxpayer dollars. In fact, it turns a profit. Since 1992, the bank has returned more than $7 billion in profits to the Treasury. Just last year, $675 million were returned to the Treasury. And the default rate, 0.175%. That's less than 1/5 of 1%. That is an effort to manage in a fiscally prudent, fiscally responsible manner. In fiscal 2014, Ex-Im authorized around $20.5 billion for 3,746 transactions, which contributed to $27.5 billion of U.S. exports and more than 164,000 jobs right here in the United States. These aren't, in most part, huge corporations. They're small companies that wouldn't be able to find financing elsewhere. In 2014, 90% of the transactions approved by the bank were in support of small businesses. So what happens if Ex-Im's charter is to expire? It will be forced to shut down, unwind current obligations, and the loss of future financing could result in a significant amount of business being lost overseas. That directly affects the bottom line for many businesses, leaving them with less revenue to reinvest, less revenue to pay wages, or create new jobs. It becomes difficult, if not nearly impossible, for the private sector to replace the loans, the guarantees, and the insurance provided by Ex-Im Bank. At a time when American companies are competing in a game that is often rigged by foreign currency manipulation, intellectual property theft, and insurmountable regulatory barriers, unilaterally eliminating our export credit agency just further handcuffs U.S. job creators and allows competitors in foreign countries to pick up the business. If Ex-Im no longer provides financing, foreign companies and countries, they're still going to buy their goods and products. They need the products. But instead of buying that product from Muncie, Indiana, they'll purchase it in Russia or China. This is, to me, the direct opposite of what Congress should be doing. It seems like up is down and down is up in this discussion. Nearly every other major country has a credit export agency. Many are larger and much more aggressive than the Export-Import Bank. Unilaterally eliminating our export credit agency hurts not only the United States and handcuffs our job creators, but it also helps competitors in foreign countries to capitalize and seize that business. Our global competitors, including China, Brazil, and India, are investing more in export financing every single day. They are investing in their companies and in their economy, and if we take this measure, we are stepping back. They are rooting for America's Export-Import Bank to close because it means more business for them. Even our neighbor Canada is providing far more export financing than the United States. Canada's economy is 1/10 the size of the United States economy, and their Export-Import agency already provides far more export financing than we do at the present time. The Ex-Im Bank is a tool that helps American companies compete in the global economy. In Indiana, we pride ourselves on what we call Hoosier common sense. It doesn't get more common sense than creating more American jobs in a fiscally responsible way. That's what the Export-Import Bank does. Congress needs a dose of that Hoosier common sense, which is the same as the common sense in the President's home state of Ohio. And we should act quickly to reauthorize the Export-Import Bank to help our companies, to help our employees, to help workers around our country, and to help our nation.